Okay, FHA loans. This is the basics and what you need to know. Okay, I'm here with Jeff.Loveland from Guaranteed Rate. He's going to be talking about all things FHA. We're going to bullet point it though. Keep it tight, keep it simple. If you have any more questions, feel free to reach out. So someone's looking to buy a house. Okay, they're looking to go the FHA route.
Sure.
What's the first thing they need to do?
So first thing we need to do is apply, just like any other loan. We need to do an application, check credit, income, and assets, and make sure the FHA loan is the right way they need to go. Okay. Sometimes I've been able to instruct people different options that may have worked out better for them, but let's say we've already done that and we know that FHA is the route that they need to go.
Who's an ideal candidate for FHA?
Sure. Typically, anyone that has a credit score below 700 to 680 and below, that's typically the candidate I'm looking for when we're going to FHA. FHA allows for bumps and bruises on your credit compared to a conventional.
Gives you an opportunity.
Right. Yep. Absolutely.
Are there any caps or limitations to that?
As far as the FHA loan itself?
Yeah, like is there someone who maybe is too qualified for an FHA loan?
Absolutely. Yeah.
Okay.
So let's say a borrower that has good credit, 740, 700, 720 credit. They have money for down payment. It might be in their best interest to look at a conventional option because really the big difference maker from an FHA to a conventional is what's called your PMI, your private mortgage insurance,
okay.
Which we'll discuss in another video as the different types of mortgage insurance. But essentially the gist is this. FHA has fixed mortgage insurance. Whether you're a 620 credit score or 600 credit score
okay.
or an 800 credit score, it's identical, right? Okay. Whereas conventional is a sliding scale. As your credit score gets better, your mortgage insurance gets cheaper.
Right, so you're going to save some money.
Right.
Pay down your principal.
And so that's why when we do the application, do the pre-approval process, we kind of identify those multiple options as far as here's your FHA loan option, here's your conventional loan option. Which one do you like? 9 times out of 9, the person's going to pick the one with the lower monthly score or monthly payment, right? So
sure.
That's typically why they would go away from FHA. But
so essentially, you got a lower credit score. You got some bumps and bruises on your credit history, mm-hmm. but you're looking to buy a house. You've got some income. Your payment might just be a little bit higher than it would be if, let's say, you had a better credit score.
Sure. Right.
That's it.
Yep.
Now, what about your money down, right? Because now FHA, conventional, you're typically going, 20% down, but with FHA though, it's as low as 3.5%, correct?
Correct. So FHA, you're correct on that. Okay. Conventional, there are actual options that you can go lower. Mm-hmm. If you're a first-time home buyer, there's 3% down conventional options. They have some caveats with those as far as income caps and things of that nature. The nice thing about FHA is they don't have any income caps. And they allow for, let's say, for example, a non-occupant co-borrower. Let's say you had to have a parent or someone co-sign with you. FHA will allow that at that lower down payment, where conventional would kick you up to like a 5% down. So that's one of the things. The other big thing that we see with FHA, why people have to go that route or choose to go that route, is a bankruptcy. Just because you had a bankruptcy doesn't mean you can't buy a house. That's not the fact at all. But the waiting time frames from when you declared bankruptcy to when you can buy a house are shorter on an FHA loan compared to a conventional.
Now, what if it's first-time home buyer, right? So what if that person had filed a bankruptcy, though, and they had a home in the past? Does that kind of wipe the slate clean?
So depends on how the bankruptcy incorporated that home, right? So if it was incorporated and it was a foreclosure, that changes the waiting time versus if it was just a bankruptcy and then the whole home was sold. Gotcha. So there's a lot of variations to that, and so it's hard to say just to give a silver bullet answer, right? That this blanket statement, everything. But
who wouldn't qualify for an FHA loan?
Yeah, so I think we talked about in another video, credit score is really below 600, okay. But that doesn't count you out either. We talk about credit building and what that looks like. If you have sub 600 credit score, I work with clients all the time that help build their scores up so they can qualify, whether it's a month or 2 or 12 months. I mean, it just depends on how much work it is going to take to get them there. But short answer, someone with a lower credit score there might not qualify today. Someone that just filed a Chapter 7 bankruptcy, let's say in December, they wouldn't be able to qualify. And then someone that also owns an FHA house, like, we're talking about doom and gloom on lower credit scores, but let's say you already own an FHA home and you are looking to buy another home. You can't do an FHA home, let's say, within the same city, right? There's a couple caveats with that. Let's say, for example, you're going through a divorce and the spouse keeps that mortgage for right now until they can refinance you off. You can then buy an FHA. But if it's just, hey, we're moving from, let's say, we're in the Denver area. Let's say we're moving from Broomfield down to, let's just say, Highlands Ranch, right? Yeah. So still same area, you would get popped for that because it's in the same area and you can't do 2 FHAs. Typically within 100 miles.
And let's say you want to buy an investment property, right? And rent it out, like the duplex, triplex, fourplex.
Sure.
What are the caveats to that? I know the answer, but let's hear them.
Yeah. So you have to live in one of those residences, right? So, but the cool thing is you still have a low down payment and lower interest rates compared to an investment property, right? Typically you're looking at somewhere in the neighborhood of 20 to 25% down, a little bit higher interest rates, versus if you're buying a FHA, duplex, triplex, those types of things, the down payment is significantly lower, closer to 3.5%, 5%, depending on which of those multiplexes you're looking at.
And are you still using the rents towards the income?
Yeah, absolutely.
Even with an FHA?
Absolutely. So you can use the rents of the vacant property. So let's say you have a duplex, right? And you're living in side A.
House hacking. Let's go.
So let's say you're living in side A, and you're renting out side B.
Right.
We can use rents from side B to help qualify. Now there's caveats with that, how much we can use, typically only 75%.
So if you're living in side A, so the tenant that's in there, it's usually 75%. Right?
Yeah, that's exactly right.
So if they're paying, $2,000 a month for rent, you're using what, $1,500 of that towards their income, towards your income if you're buying this investment property FHA.
Right.
Which now bumps you up, which allows you to qualify for a little more.
Yep.
Come on, folks. Here you go. We're just giving you the keys. Take it and run. Let's go. Okay, great. And then I think we've covered it all, but is there anything else you can add to that?
That's really the highlights of the FHA loan. The FHA loan is really, people think it's only first-time home buyers, but it's not. People that, like we've talked about multiple times here, it's bumps and bruises on your credit, bankruptcies, or let's just say, for example, it just works out better for your financial position to go FHA. You don't need to be you don't have to be a first-time home buyer to qualify for an FHA loan.
So looking at this from the real estate side, okay, from a realtor side, working with my buyer, okay, in this seller's market right now, I look forward to the buyer's market. Don't get it twisted. I got a list of listing agents, okay? Got my list. I'm coming for you, all right? Once the tide shifts. But right now, you got us. So for an FHA person to even be in the mix, is there anything they can do or anything that maybe with an offer that could disqualify them from being FHA?
Let's see.
So can they still do a purchase price?
Over asking? Correct. Yeah, sorry.
The appraisal gap?
Yeah, absolutely. If let's say you have
an extra $50K cash.
Yeah, or not even that. Let's say you only have $15K.
Okay.
Right? And you want to have a competitive offer, right. And so maybe you close to have like 5 to 6% down. But we've already discussed this in our pre-approval process, and we go to that 3.5% minimum down payment.
Let's use the $500,000 home, for example. That should be 15. Let's say it should be what, 20? Does that sound right? 20 grand, 17, something like that. Let me bust out a calculator here. Hold on one second. Let me get this calculator right now.
All right,
this one right here. Okay.
Oh, there you go.
Because they say guys are good at math. I don't know. Okay, so because I want to make it realistic for folks. This is how I learn too. So let's say you're trying to buy a home that's listed at $500,000, right? You're going to put 3.5% down. Okay, that'd be $17,500, right? So $17,500 if you're offering $500,000.
Right.
Okay. But now what you're saying is, let's say they have an extra 15 grand on top of that. So you've got 17.5 plus 15,000 in cash. So you've got $32,500 cash to play with, okay? Now this is going to change a little bit if we go over the purchase price, so bear with us. But let's just say you've got that much cash, right? Let's say you've got that extra, so now you put X amount down, right? So you say you put 3.5% down. But we want to win, right? So I got to back this up a little bit. So you've got more than the 3.5%, okay? Let's say you want to go, let's say you've got $15K to play with, regardless, right? You're going to offer 510, okay? There's a couple offers, but you might get it. You're offering 510 with a full appraisal gap, like we talked about before, okay? So you cover the difference. Check out our video on appraisal gap, but you cover the difference if it appraises, right?
If it appraises.
If it appraises. So let's say it appraises for the purchase price or the list price of $500, right? And then you've got to make the difference up to 10 grand. This is where I start getting really confused, okay? You start talking circles around it, okay? So now your offer's 510. So we'll go back here. So 510, okay, so you're putting 0.035 down. Okay, so you're putting $17,850 down. Okay, now you're able to come to the table with that 10 grand. You still can afford that. You're still in the clear. Okay. Anything you want to add to that?
Yeah, the only caveat. So you've hit everything. The only caveat is depending on where you're looking. So every county has an FHA. So this is one of the things with FHA. They have a little bit lower loan limit. Right, and so depending on where you're specifically looking at the house, that 510 option may not qualify for you because you may be above the loan limit for that particular county. So I just wanted to add that kind of that caveat of, hey, this, or disclaimer that particular option may not work for, depending on the county you're in. Some counties a little bit higher priced, that will allow. Some that are a little bit lower priced, that won't allow.
So the county dictates how much of an FHA loan you can essentially use towards buying a home.
Essentially, that's correct.
Where can they find that information? Is it just something they should reach out to you on?
Yeah, I think the easiest way is to reach out to me and I'll get you that information if you know kind of where you're looking. And if you're in an area that multiple counties, which Denver is,
let's
right?
say Denver County.
So if you're looking at Denver, Adams, Douglas, all of those are going to be very, very similar.
All Denver Metro.
When you start getting into like Elbert or Summit, a little bit farther away, that's where you're going to see differences there. And I think that's the one thing you need to be aware of as you're looking for an FHA versus a conventional. And that might be one of those things where, as we talked about in our credit video, you only need a 620 credit score to qualify for a conventional option, and maybe that mortgage insurance is a little bit higher, but in order to qualify for that $510,000 purchase price, you need to go conventional and take that higher price. Does that make sense?
100%.
So that's, once again, that's why it all kind of leads back to why pre-approval is so important, because you know what you can and can't do.
So they need to know. Obviously, they need to know where they qualify, so they need to file a pre-approval, right, to get clear on their cash, clear on their qualifications. They also need to know where they're going to live, so you need to know where you want to buy a house, what county that's in, and then recheck that out with your lender, okay, and make sure that you are within your loan requirements as far as what you're qualified for to buy that home. Okay, if not, you might have to go conventional. So I think that's it.
Yeah.
I started confusing myself there once I busted out the calculator. That's what happens when you start dealing with some of these appraisal gaps. But I think you got the gist of it. If you have any more questions, feel free to reach out. But it does give you an opportunity where maybe you couldn't have put 20% down because you didn't have enough cash to do that, but you qualify for FHA in a home. You can do 3.5% and free up some of this other cash that you had to maybe win an offer, right? And go a little bit over asking price. So hope that helps you out. If you have any more questions, feel free to reach out to us. You can also leave them in the comments section below. Hey, we're here to help. So
absolutely.
That's it. Thank you.
Thanks.